my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A bullish white soldier yesterday, almost day 2 of a 2-day bullish above the stomach pattern, but not quite making it. It was nevertheless a rejection of the earlier move back down below the top of the old broken rising wedge pattern, currently at 69.52, as well as a rejection of the move under the important January 2021 high at 69.10. As I've recently oft mentioned, it seems there are a lot of contradictory and odd forces at play here. Overhead, we still have the upper time resistance, currently at 70.60 of the broken but still seemingly effective December 2020 to late January 2021 bullish shift pitchfork. Whilst below we have the rising short medium moving average, currently at 68.47, and its partner, the uptrend, currently at 68.13, that made up the lower trend line of the old January to March sideways triangle. Now so far today, a test lower towards the top of the old broken rising wedge pattern, but a swift retracement back up, as the market was not happy at tackling it again, though the move higher has been limited as well. German DAX futures. A bullish double yesterday, well, just about, as the market seems happy to stay within the recent odd ranges, hence the move higher. Below we have the rising short medium moving average, currently at 15.028, and its partner, the late October 2021 to date uptrend, currently at 14.954. All this comes on the back of the last 2 weeks action of a fairly rare compound weekly key reversal up. Now one would have liked to look upon this rare pattern as a superior bullish indication, but until yesterday that's not what the market has said this week. Anyway, the potential is still there for a try higher, possibly towards target X1 in the 15,800 area, a more recent topside target for the small diamond continuation pattern, though in between we still have the projected 50% Fibonacci line at 15,629. So far today, a gapping higher open since filled that has stabilized at the open, and also seemingly happy to stay within recent weeks odd ranges. It's actually looking like an indecisive doji cross right now. US E-mini S&P futures. A bullish engulfing pattern yesterday, a not entirely unreasonable reaction to the previous session's indecisive doji cross. However, given the seminal moment, or moments I should say, earlier this week, or of last week's immediate countering key reversal down, weekly key reversal down, and Tuesday's daily key reversal down, that dropped the market down and out of the important lower time, currently at 41.65, of the influential if broken December 2020 to early February 2021 bullish Andrews pitchfork. So all of this going on, and yes, there was a reactionary move back up. Well, just goes to prove that what I've been saying here all this week has been true. This was a microcosm of the bigger picture, a fractal interpretation of what else is going on. Did last week's action mean that the prior week's bullish key reversal up is cancelled and superseded by the second larger bearish one? As I've said before and say again, the answer was still yes and no. Yeah, I'm sorry to keep sounding obtuse, but it's important to understand this. On the surface, it does show a stronger bearish pattern has overcome a quite strong bullish pattern immediately. Now, for those who like their answers simple, there you have it. However, the true answer is more complex. What it shows is the depth of indecision this market has undergone since early April. Hence, I would say it was and still is indecisive, even now, purely because of its unusual nature and the way it has expressed this through its market's actions. This is one worth watching carefully, even more than before. So far today, a slightly lower open, but a move back up from the start and tackling the lower tine once again, though obviously from below. Seems the market has an urge to get back within this bullish shift pitchfork. Question is, will the pitchfork allow it? As just above we have the projected 50% Fibonacci resistance at 41.83. French CAC 40 futures. A bullish white soldier yesterday, and also day 2 in a 2-day bullish above the stomach pattern. This time the market opened over the important April high at 62.80 and tried up back over towards the broken bullish shift pitchforks overhead. The lower tines of the December 2020 to January 2021 bullish Andrews pitchfork currently at 64.25, and the new late January, late March bullish shift pitchfork, that's currently at 64.35. Now, as I said, the utility of these two bullish Andrews pitchforks is seemingly coming to an end. Now, if we end tonight, maybe even Monday night next week, under them, which seems possible right now, then I'll retire them. Anyway, back to yesterday. The market pierced the next overhead resistance, the projected 50% Fibonacci line at 63.48, but failed to close over it. All this action is in the frame of last week's weekly key reversal up, for which yesterday's action finally is a supportive factor. So far today, a further supportive action, a higher open over the projected 50% Fibonacci line at 63.48, but very cautiously making its way up towards the lower tines, yet which now has the all-time high at 64.18 made earlier in the week in the way. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.